Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we're diving into Cintas Corporation's latest report, and let's just say their numbers are looking pretty uniform. This is your essential rundown of Cintas's performance. We're talking about how they're doing, what is driving their business, and what it all means for you. This is not just a bunch of numbers, it is the story of how a global leader in business services is actually performing in the real world. Cintas is a giant in the business services industry. You know them for their uniforms, but they do a lot more, like providing safety equipment and even fire protection services. They're a staple for many businesses, big and small. Their stock is traded on the Nasdaq under the ticker CTAs. Now, let's get to the heart of the matter. This report from September 2025 is all about their financial results for the quarter that ended in August 2025. Think of it as a quarterly check up for the company's financial health. The really juicy stuff in these reports often comes from the financial results. While this particular filing is brief, it points us to a press release that contains those details. And that press release is what we're here to decode for you. This press release is the official announcement of their earnings for the quarter ending the 31st of August 2025. This is where we find out if Cintas crushed it or just coasted. Usually, these press releases highlight key financial metrics. We were looking for revenue growth, profit margins, and what they were expecting for the future. For Cintas, a company that uniforms so many businesses, their performance is a pretty good indicator of the broader economy. As health, especially for small to medium-sized businesses, are companies hiring more people, which means needing more uniforms. Are they investing in safety and cleanliness? These are the questions these numbers answer. Cintas Corporation, trading on the Nasdaq, is a company that relies on consistent demand from other businesses. When businesses are doing well, they spend more on services like uniforms, facility services, and safety training. When businesses are struggling, these services are often among the first to be cut back. So, their numbers tell us a story about the business landscape they operate in. We are skipping over the addresses and contact numbers because, frankly, who cares about that when we want to know if the company is making money or not? We're here for the insights, the meat of the report, not the filler. The report is signed off by Scott A. Garula, their Executive Vice President and Chief Financial Officer. This gives us assurance that a top finance executive has reviewed and approved these disclosures. Now, let's talk strategy and outlook. While this specific filing primarily references the press release for the detailed financial results, we know from Cintas's business model that they thrive on recurring revenue from their uniform rental and facility service segments. Their strategy typically involves expanding their customer base through a strong sales force and maintaining customer loyalty through excellent service. Acquisitions are also a key growth lever for them. What we're always looking for in these kinds of reports, even when they're just pointing to another document, is forward-looking guidance. What does Cintas expect for the next quarter or the rest of the fiscal year? Are they seeing increased demand or are there headwinds? For Cintas, potential risks could include economic downturns that lead to reduced business spending, increased competition, or rising costs for labor and materials, which could squeeze their profit margins. On the flip side, opportunities abound. As businesses increasingly focus on employee well-being and safety, Cintas is perfectly positioned to capitalize. Think about expanded health and safety services, or even new offerings that help businesses adapt to changing workplace environments. Their operational efficiency and scale give them a significant competitive advantage. So, to sum it all up, this filing is a confirmation that Cintas has released its quarterly financial results. It is an invitation to look at their official press release for the nitty-gritty. What we anticipate is likely a performance that reflects the ongoing demand for essential business services. We expect them to be managing costs effectively and possibly signaling continued growth, especially if the broader business economy remains robust. In my opinion, Cintas is a well-managed company with a resilient business model. Their diversification into various service areas beyond just uniforms provides stability. The primary strength is their entrenched position with a vast customer base and the recurring revenue model. A key risk, as always, is their exposure to economic cycles, but their essential service offering tends to be more defensive than many other industries. Going forward, I'd watch their expansion into digital services and how they manage inflation for their operational costs. Overall, they are likely to continue showing steady performance, but for a definitive financial picture, digging into that reference press release is crucial. Alright, that is our quick decode of this Cintas filing. What were your key takeaways? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe for more in-depth corporate analysis. And hey, join our growing community over on Discord. The link is in the description. Thanks for watching and we'll see you in the next decode.